The nuclear energy theme, one of the market's greatest performers late last year, has gone into a broad slide. Stock prices have pulled down sharply in utilities, uranium miners, small modular reactor, SMR developers, and nuclear infrastructure suppliers. For investors, the key question is whether the current situation is a buying opportunity or the start of a long slump. Part of the bull thesis is that a lot of the recent dips seem to be sentiment-driven, not fundamentally driven. The waning enthusiasm for artificial intelligence has been a drag on power generation and infrastructure companies that might have benefited from AI-driven electricity demand. With nuclear energy now a closely connected part of the AI power tail, the sector has fallen off with other AI-related subjects. Energy markets are also tumultuous due to geopolitical issues, changing forecasts for power consumption, and volatile fuel prices. But nuclear proponents claim nuclear generation is one of the only long-term solutions that can offer constant, stable baseload power and reduce future grid volatility. Remember that this video is for educational and informational reasons only. This video provides no financial, investing, or performance advice. No securities are offered. Investors should investigate and consult their financial advisor before investing. Constellation Energy, CEG, and NextEra Energy, NEE, are two excellent corporations in the space that make for a strong core holding in terms of size and tenure. Unlike many pure-play nuclear brands, these corporations have wide utility businesses that provide stability and the opportunity for nuclear expansion. Constellation's bid to restart the 3 Mile Island reactor has made it a big nuclear story. The project requires a large capital outlay and pressures near-term cash flow, but positions the firm to materially benefit from future growth in nuclear demand. The stock has dropped more than some of its rivals, partly due to concerns about those assets. NextEra Energy has a varied investment profile. It has a large renewable energy portfolio, owns Florida Power and Light, and is exposed to rapidly growing power demand areas. The company is well positioned for long-term growth in electricity consumption and possible nuclear expansion, particularly as demand for data centers and AI infrastructure continues to grow. Uranium miners further down the nuclear supply chain have also experienced significant pullbacks as uranium spot prices have retreated from recent highs. Many investors are seeing this weakness as an opportunity, as uranium prices near a level at which many producers can still make money. Cameco, CCJ, is one of the largest and most established producers of uranium. Its scale, political relations, and long-term contracts make it a primary position for many uranium investors. Uranium Energy Corp, UEC, has the advantages of a different approach with its extraction technologies and development projects, which could allow them to benefit disproportionately if uranium prices rebound. There is uranium exposure for energy fuels, UUUU, but there is also rare earth element exposure. This diversification provides investors exposure to two essential resource industries, both critical to energy security and advanced technology creation. Operating leverage is a big part of the investment thesis for uranium miners. Mining costs are relatively constant, while revenue is a function of the price of uranium. Thus, lower uranium prices can have a significant negative impact on profitability, and higher uranium prices can have a significant positive impact on profit growth. Investors looking ahead to a future deficit in uranium supply see the current slump as a building phase. There are several potential drivers for increasing demand for uranium. They include reactor refueling cycles, the restart of idled nuclear plants, an increase in military nuclear requirements, and the ultimate commercialization of compact modular reactors. Many in the industry see these elements as the spark of a long-term uranium demand cycle. The most speculative segment of the market remains small modular reactors. These companies are working to bring novel reactor technologies to market that they say will be cheaper to build, more flexible, and more scalable than traditional nuclear reactors. Oklo, OKLO, is generally considered a leading SMR developer. Investors are showing hunger for reactors, and regulatory interaction is moving forward, despite huge market volatility. NuScale Power, SMR, is one of the most well-known names in the SMR business. The company is developing its reactor ideas and searching for partners at home and overseas. Reactor development efforts have shown interest in Nano Nuclear Energy, NNE. Strategic acquisitions have expanded capabilities from reactor design to transportation and logistics related to nuclear fuel. Investors should understand that these companies are still in the infant stage. Most of the financial potential is years away, and companies are pushing back commercialization dates until the end of the decade. So, price swings are usually more about emotion, regulation changes, and project milestones than the profitability of the moment. For those searching for nuclear exposure, but maybe with less risk, BWX Technologies, BWXT, is a highly interesting option. The corporation is the only supplier of reactors, components, and services to the military and commercial nuclear markets. BWXT is already making a lot of money on its present industries, including supplying reactors for U.S. naval vessels. The whole nuclear business is on the rise, and the corporation will benefit, whoever the reactor designer is. It's a wager on the complete nuclear ecosystem rather than any one technology, and a critical supplier to the whole. The case for nuclear investment broadly remains one of rising electricity demand, aging power infrastructure, energy security concerns, and the potential requirement for reliable low-carbon generation. Some corporations are now trading at more attractive prices following the recent decline in the industry, but investors need to understand that different segments have very varied risk profiles. Utilities, CEG, NEE, give stability and cash flow. Uranium prices leverage uranium miners such as CCJ, UEC, and UUUU. Oklo, SMR, and NNE are the SMR developers that have the highest upside potential but also the highest uncertainty. BWXT is a diversified infrastructure play that can do well no matter what nuclear technology wins market share. For long-term investors who anticipate a large role for nuclear power in future energy systems, the recent decline could be an opportunity to build up shares carefully, but it will certainly need patience since many of the sector's key growth triggers are likely to play out over the rest of this decade. Thanks for watching. Please subscribe to the channel. It really helps us out.